Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. Okay, in this video we are going to be diving into an essential indicator that can elevate your trading strategy, and that is the smooth moving average. Okay, if you are looking to refine your trend following strategy and reduce market noise, the SMMA, which is the smooth moving average, could be a game changer for you. Now in this video, we're going to be breaking down how the smooth moving average works and how to apply it in your trading and why it's so effective in helping you spot trends with more accuracy. So make sure to stay tuned till the end. Before we get started, don't forget to hit that like button and subscribe to the channel for more Forex trading strategies and tips. Now let us dive right in. Let's start by understanding exactly what the smooth moving average is. So I'm just going to be adding the smooth moving average. I'm going to change this MA method to smooth, and there we have it, the smooth moving average. Okay, now the smooth moving average actually works by smoothing the price over a series of periods. Okay, the smooth moving average is an advanced version of the simple moving average. It is designed to smooth out price fluctuations even more effectively. While the SMA calculates the average of a set number of periods, the smooth moving average goes a step further by giving more weight to recent data points, making it more responsive to changes in market trends. Now, it works by smoothing the price over a series of periods, but unlike the exponential moving average, which places more emphasis on recent prices, the SMMA, which is the smooth moving average, is less reactive to sudden price movements, resulting in a smoother line. All right. So this makes the smooth moving average particularly useful for traders who prefer to reduce market noise and focus on long-term trends. The smooth moving average provides traders with a clearer view of the overall trend. As we can see, you can be able to identify the overall trend at a glance. All right, and it can be applied across all types of markets. Now let's talk about how the smooth moving average works in practice. The smooth moving average is calculated by taking the average of the closing prices. That is, if your value, if your apply to is set to close, right? If it's set to close, you're going to calculate the values of the closing prices, over a particular period. So if you are using the 50 SMMA, for example, the first value of SMMA will be the average of the first 50 closing prices. So from there, the calculation for the next period involves taking the previous SMMAs, the previous period SMMA value, and incorporating the most recent closing price, smoothing the average further. Okay, the smooth moving average is most useful when applied to longer time frames. Alright, as you can see, I'm on the daily chart. I'm on the daily time frame. Okay, so and these are the long-term averages help you clearly identify major trends. For example, you can see I'm using the 50 period moving average. Okay, now that we understand what the smooth moving average is and how it works, let's get into how to use it in your trading strategy. One of the key ways that traders use the smooth moving average is to confirm trends. So if the price is consistently above the smooth moving average, it indicates an uptrend, like we can see here. And if the price is consistently below the smooth moving average, right, like what we can see here, it signifies a sell trend. Okay, it signifies a sell trend. Now the best part, because it's smoother, you won't get as many false signals as you would with shorter term moving averages. Okay, this makes the smooth moving average a great tool for traders who prefer to stay in the market longer and focus on larger trends rather than short-term price fluctuations. Now another way to use the smooth moving average is through crossovers. Okay, in that case you have to add on another period. So in this case, let me add the 200 period smooth moving average. Okay, so when you have a crossover, right, for example, the smaller period crosses below the longer period, you have a sell signal, and when the smaller period crosses above the longer period, you have a buy signal. It's as easy as that. Okay, by using the smooth moving average crossovers in combination with other indicators or trend confirming tools like support and resistance, I always try to emphasize on the importance of support and resistance zones. So when you have a confluence between crossovers and support and resistance, for example, in this case, we had price bouncing off this support, and at the same time, we had a bullish crossover with the moving averages. So that was a great place to enter a buy trade. All right. So it increases the accuracy of your entries and exits. Crossovers can be especially powerful when combined with other indicators like RSI or MACD, just to confirm whether the market is overbought or oversold. Okay. Now, let us talk about why you should consider using the smooth moving average in your trading. The main advantage of the smooth moving average is its ability to smooth out the volatility and provide you with a more reliable view of the overall trend. Okay, so by reducing market noise, it allows you to avoid false signals and make more informed decisions. It's especially useful for trend following traders as it helps confirm the trend strength and direction. You can use it on all time frames from the 1 minute chart to the daily chart, and it's just as effective on each time frame. Okay, the longer you set the period for the smooth moving average, the smoother it becomes, making it easier to identify clear trend directions. Now, the smooth moving average is also less prone to whipsaws, those quick, sharp price movements that can trick traders into thinking the trend has reversed when it really hasn't. Okay, this makes the smooth moving average a great option for traders looking for a smoother, more consistent trading approach. All right. Now, while the smooth moving average works great on its own, it's more effective when combined with other indicators. For example, you can pair the smooth moving average with the relative strength index. All right, just to confirm whether the market is overbought or oversold when a crossover occurs. For example, we had a crossover around here, right? And right about that point, we can see that the RSI was showing bullish momentum, as it was not yet in overbought territory, but it was already over the 50 level. So that was a good confirmation. Okay, the best traders use multiple indicators to confirm each signal, and the smooth moving average pairs well with a variety of other indicators to create a robust trading strategy. Now, you can actually use any other indicator of your choice for confirmation. It doesn't necessarily have to be the RSI. Okay, you can use any other indicator of your choice, all right, for your confirmations. Now, to wrap things up, the smooth moving average is a powerful tool for traders looking to reduce market noise and get a clearer picture of the trend. Whether you are using it to confirm trends, spot crossovers, or refine your entries and exits, the smooth moving average can be a valuable addition to your trading toolkit. All right, but remember, like any indicator out there, the smooth moving average works best when used in conjunction with other tools and proper risk management. So if you found this video helpful, hit the like button, subscribe to the channel, and share your thoughts or any questions in the comments below. Thank you for watching, and I will see you in the next video.